want to talk about a company with a stock that can't seem to get any respect in this market, Alcoa AA. Tonight it reported still one more upside surprise. Market's yawning once again because this company acts like a hapless commodity maker. That's why the company is taking the extraordinary action of splitting in two, giving you both what is a profitable commodity producer and a highly value-added aluminum technology company with an aerospace bent. I like the transformation, although I am drawn more to the engineered side than the commodity business. So let's dig deeper with Klaus Kleinfeld, the chairman and CEO of Alcoa, find out more about this quarter and where the company is headed. Mr. Kleinfeld, welcome back to Mad Money.
Very good. Hello, Jim.
All right, Klaus, I want to start with your outlook for some of the businesses that will be part of really the proprietary technological superior Alcoa. Aerospace, you're going with 8 to 9. Automotive, China, you're saying 2 to 5, which I think is pretty amazing. Heavy-duty truck, you're saying China 1 to 4. The whole impression that you're giving me in your deck is that if you want to be in Alcoa's markets, you're going to have a good year in 2016 because you happen to be in the right markets, particularly in China. Too bullish?
Well, a little bit too bullish in the environment that we are in because, I mean, who would have expected that after last year's finish, you know, we open up this year with so much confusion in the market. I mean, we know that the financial markets swing stronger than the industrial markets, but I think there is a lot of volatility in there and markets communicate. But in general, I would say, yes, we've worked very hard on the value add side to be positioned in those markets that have growth. And on top of it, I mean, we are actually having accelerated growth in those end markets because we are aluminizing these places. When you look at aerospace, I mean, in aerospace, we've built out our portfolio over the last years. You've just seen last year, I mean, all of our customers basically appreciated it, and they put their money where their mouth is. We got $9 billion of long-term contracts, $4 billion of those just in the last quarter. Automotive, F-150, Detroit Auto Show, proud moment. F-150, biggest selling car here in the U.S. again for 30, I think, 9 years or so, you know. And what is the new F-150? It's a fully aluminized car. But it's not just Ford that's a customer of ours. It's basically the major players all around the world that are customers of ours. You know, commercial transportation, we're catering to this market, building and construction. We are in those markets and we're growing with the markets, and most of the time we're growing above the markets. So this is good. This is good.
All right, now I like to talk about what Alcoa looked like versus what it looks like now, because the stock's not really doing anything, and that, I think, is a mismatch. Upstream. If you had broken into Upstream 2 years ago, how much money would you have lost in this environment?
Oof, you know what? I don't even want to think about it because I think this would be something that would make everybody sweat. But the very fact that we didn't do this because we continued to work on it, we have made it better. You saw again this year productivity of 1.2 billion. About half of this comes from the upstream, right? Nicely delivered. Curtailment closures. We have, once we are done with all the curtailments, I would say 40% of our smelting capacity is curtailed and roughly about 28% of our refining capacity, right? I mean, so we have really taken everything into our hands. We've come down on the cost curve. This is a more competitive business. We've changed the architecture of the business. We are building out the bauxite business. We didn't have an external bauxite business before. We have started to do this last year, and it's working very, very well. We've made our energy business independent and decoupled it from delivering energy to our facilities. All of these things are things that enabled us to generate more profit and give us more flexibility and allow in the end the separation that we are doing at the second half of this year.
All right, I want to clear up some things about China. Last quarter you talked about how it's really not a story of them flooding the world with exports at all, and you were saying that you believe that Alcoa's view was that there could be a deficit in aluminum even in 2016. Still possible given the slowdown?
Well, I think we not only do we continue to believe that, you will see in my later call today with the investors, we actually taking the number of the aluminum deficit up for 2016, our forecast, and we also believe that there's going to be a deficit on the alumina side because we've seen that curtailments, like with us, others are doing the same thing. Demand continues to go up, 6% demand increase for aluminum, and you basically have this going through on the alumina side because you need alumina to make aluminum. Right? An even more increased demand on bauxite because China, their own bauxite capabilities that they have in country is depleting further. Malaysia has just announced a bauxite ban a week ago. Indonesia has a bauxite ban in place. So there are a lot of things that support the upstream business. And in addition, I mean, we have made it better. We've made it more competitive. It's come down on the cost curve.
All right, now let's talk about the engineered portion. When I look at how much is aerospace, because you've made some very smart acquisitions, I think about a company. I know this is really may not initially be analogous, but I'm going to go there. Baxter. Okay, so Baxter has two businesses. It's a healthcare business. It's got a business that it just kind of doesn't really want that's healthcare called Baxalta. And it immediately splits it off from Baxter, and within 10 days, Baxalta gets a bid. Why? Because Baxalta was undervalued, because the company no one saw the hidden value within. When I look at the breakout of just aerospace, forget truck, forget gas turbine, forget can, okay? Forget car, F-150. I want that aerospace business. Isn't this, with this stock at $8, if it's still at $8 and you split these two, well, how can you not have a Baxalta situation just because of the aerospace business?
Yeah, I think you're absolutely right. I mean, you clearly see that there is enormous hidden value in this, and we have uncovered the hidden value in the last year. This wasn't there many, many years ago. I mean, we basically changed the composition of the value add business. We've put a lot into innovation. We've come out with really interesting innovations on those products that we had, and we did those very important acquisitions. We've doubled with First Rixson the content in jet engines. Jet engines is probably the most important component in aerospace driving, in the most important way, driving innovation on platforms. And at the same time, we've consolidated the position on aircraft structures with innovations like aluminum lithium, and also with our expansion in titanium. Titanium is the largest growing metal in aerospace. And with our acquisition of RTI, this has worked out very well. And you see it again also in contracts that have been coming in. With RTI, I mean, we wouldn't have had the opportunity, for instance, to win the C-tracks for the 787, the contract that we just got in the fourth quarter, if we wouldn't have acquired RTI. I mean, our customers see that our portfolio now in aerospace is so good, it caters so well to their needs.
I know you saw the big contract. One last question, you got to make it quick. Elliott came in, took a position, wanted certain things. Are they happy?
You have to talk to them to find out whether they are happy. All I can say that the conversations have been very constructive and frankly very much along the lines of how we are thinking, how I'm thinking. I mean, I think they see the same upside potential that we see, and I see it as a validation of the strategy that we have been following. So I was not surprised that they are coming in, and as I said, all the conversations so far very constructive.
All right, Klaus Kleinfeld, Chairman and CEO of Alcoa, thank you so much for joining us, sir.
Pleasure.
Look, if the stock's going to sit here at $8, I'm just going to tell you to buy, okay? There really is not much more to it. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.